I think it tells me that markets have been essentially waiting for any news, right? So anything to hang their hat on, any piece of certainty. And so if we're thinking about this framework, I think some of the details we know have to do with rare earth minerals concessions, right? There's very, very light information on what's in there. The interesting thing about this is that even though we have sort of a black box on all of the other negotiations, they have said that they're willing to kick the can on the 10%. So we know that there is essentially a set baseline going forward and that the rest is just, right, this negotiating piece. We think that ultimately you're going to land lower to closer to 10% than say 30, 40% in some instances, depending on the country. For us, this means positive market response because you're not getting the worst case scenario, right? Markets have essentially adjusted and priced in this activity. But it also means for us as investors, right, is that we know which industries, which sectors are going to be the most impacted and where we have status quo.
I was at the G7 Leaders Summit, and so I watched as the president left, and there were all these disappointed delegations who had flown great distances, spending a lot of time on airplanes with the hope that they could get some time with President Trump and his team to talk through these trade deals. As you listen to Secretary Lutnick talk about how we're close to these 10 deals, 10 major trading partners signing deals, we had Scott Bessent on Fox Business this morning talking about all of this getting wrapped up by Labor Day. How much has all of the activity of these last few weeks, so that's the G7, that's the NATO summit, and of course all that's been happening in the Middle East, set back this timetable? How much realism is baked into the fact that we could get some deals here signed soon?
I think that it is real that you could get some deals signed soon, especially by August. The fact that they've pushed out that deadline, and I think they'll continue to do so. Yeah. I don't think we're really beholden to any specific time frame, other than that. If we're looking at the tax bill, so I'm going to shift here
please.
to OBBB, the one big beautiful
yes.
bill. If you're looking at the fiscal hawks and getting them to the table, there has to be some sort of assurance, right, that they can offset some of the debt and deficit. And so while we may not know what those specific parameters are, we do have a baseline expectation from the CBO of what types of revenue could be raised in event of heightened tariffs.
It's Friday. My brain, you're killing me, David. All this stuff is way too nerd fest. Monica, are you concerned about our debt and deficit? Or do we just, the proverbial little g, we just continue to grow our way out of this mess?
The idea from this administration is, yes, they want to grow their way out of this.
I know that.
Now,
every administration since Zachary Taylor, thank you. I remember John Tyler.
Jonathan Taylor
I
Thomas.
almost interviewed John Tyler once. Help me here. Right now, we're going to grow our way forward, extend and pretend.
So let me just put it this way. I'm not a modern monetary theorist. I don't prescribe to the idea that debt doesn't matter. Now, what I do want to highlight is that you have to have growth at levels that outpace the pace of interest expense growth, right? And so if they're able to get that balance correct, right? If you get the GDP to interest expense balance correct, then essentially you can keep going for quite a while, right, on this productivity promise of the United States. So we don't actually see that cracking yet, but it is still a problem.